Hello and welcome everyone. My name is Neil Shah and I will be your host for today for a live chat show, Factoring One Stop Solution for Your Global Aspirations. We have a very eminent speaker with us today, and before I introduce her to everyone, I'll quickly like to welcome everyone to the chat show and give you all a brief details and understanding about India Factoring and what we do. India Factoring is a premier trade finance institution registered with the RBI as an authorized dealer 3 in 2009, and it holds an NBFC factor license. Our flagship offering is the non-recourse product, which helps clients to avail factoring without the facility appearing as a liability on their balance sheets. Such niche, structured trade finance products from India Factoring offer ease and flexibility in managing working capital requirements of businesses by funding an agreed percentage of invoices soon after shipment of goods or after the services have been rendered. We are the market leaders in export factoring in India since 2018. Now, coming to our esteemed guest for the day, Dua Hafiz. She is a highly motivated open account trade solutions professional with over 24 years of work experience in developing and implementing open account trade products and innovative working capital solutions, along with open account trade sales and business planning. She started her career with IBM WTC Business Innovation Hub, supporting the Middle East and North African region in digitalization and product innovation. Refined with a full dedication for the past 17 years with the Fimbank Group, she is currently playing the role of Egypt Factors General Manager and is an executive committee member of FCI Factor Chain International, providing unique and advanced working capital innovative solutions. She is also a quality focused leader with relentless drive for excellence and broad expertise in product structuring and development, operational risk controls, and she's always had a strong focus and commitment on delivery excellence for achieving the strategic business value and maximizing client satisfaction. I would like to welcome her to the chat show. Hi, Dua, welcome.
Good morning. Thank you, Neil, for your kind introduction. It's always my pleasure to be with you and to find these golden opportunities to speak more about factoring and the world of open account, receivable finance, and supply chain finance in general. Also, I am so much passionate in understanding and getting more insights about how can we do this type of businesses in an innovative way. The working capital innovative solution in general is a passion of myself, and I am so much happy to be with you now and to listen more and to be able to, give my insights about this innovative solutions and also standard solutions in a region which is quite promising. The African region, the Middle Eastern region, India, of course, it's quite a promising market for factoring and open account trade finance.
I think at least I'm definitely very eager to hear more about these, and I'm sure people who've joined us with us would be feeling the same thing. Before we deep dive into factoring, trade finance, and all, just one question I would like to start off with something about the economy. The geopolitical situation around the world has seen constant turmoil in the last few years.
Yeah.
There's the US elections coming around the corner, and overall the economy is somewhat in a disinflation phase. So, what do you see as your economic outlook for the next few months?
Always the US elections often bring a shift of economical politics, especially when considering physical measurements, trade agreements, and geopolitical alliances. However, the key considerations could be in the global supply chain realignments. So, having this type of pressure coming from the US elections, usually you will find a lot of the global supply chain companies trying to do or to rethink about realignments and different supply chains. To diversify more a manufacturing basis likely continue, but it could contribute to short-term supply shortage or price pressures. So usually they are trying to find sort of alignments to be able to overcome this type of challenges that coming from the U.S. election and any type of economical problems. Also, the interest rate policies, the central banks, particularly in the U.S. and the UE, may continue to implement tight monetary policies, raising interest rate to counter inflation. However, if this inflation persists, these policies could relax potentially, more toward a growth strategy rather than a very conservative strategy. Also, one of the challenges that could lead to something promising is to find more opportunities in emerging markets. So, in emerging markets, this inflation in the developed world could present opportunities for capital flows into emerging markets, particularly regions like Africa and the MENA region, which we are seeing increased investment interest. However, this region also need to be stable and to have the infrastructure and the legal and regulatory framework to encourage more investment coming from outside to develop these regions. Of course, the energy market is also could be a question because energy prices remain very sensitive to any geopolitical tensions, especially in regions like Eastern Europe and the Middle East. However, such type of tensions usually lead to again focusing more on finding the resources in the emerging market because the emerging market considered to be low cost markets. So most of the global supply chain networks and the investments and even the energy market stakeholders are seeing a lot of potential in the developing regions to start finding the opportunities and to find the cost efficiency solution coming from these emerging markets. So from my own point of view, whatever type of challenges coming from the US elections, you will always find the stakeholders and the decision makers are focusing more on developing and finding their resources from the emerging markets, which could be a great benefit for our regions.
Very well said. Just highlighting one of the points that you said that the rate cuts. I think this European Central Bank already gave one rate cut, and I think Federal Reserve has a meeting next week where they're again expected to go in that direction, and it's expected by the year end a few more rate cuts are expected from both the ECB and the Federal Reserve. So, do you think they have accepted that it's more important to look at the bigger picture and go towards rate cuts now rather than focusing just on the inflation parameter?
Yeah, I have, I think one of the key impacts of this rate cuts on businesses will be improved access to credit because the lower interest rate typically reduce the cost of borrowing, making it easier for businesses to access capital. This is especially beneficial for small and medium enterprises. They rely on external financing for expansion, innovation, or operational need. The expected rate cut will likely stimulate investment, increase business activity, and drive growth, particularly in sectors sensitive to interest rate, such as real estate, construction, manufacturing, textile, and all of this type of SMEs businesses. So the improved access to the cut of the or the impact of this rate cut could really improve access to credit, also could boost consumer spending. With lower interest rate, consumers may be more willing to borrow for big ticket items such as homes, cars, or other consumer goods. This can have a direct positive impact on businesses involved in consumer goods, retail, and services. The rise in demand can lead to increase in production and sales, which all boost business revenues. So I'm still trying to, to find the negative, sorry, the positive side from any negative impact or any stress coming from any type of, political or economical decisions that could affect the businesses. But still, I'm saying that this could also be positively impacted in finding the financial needs for SMEs or even in the pattern of the consumer spending, which could lead to more businesses and more opportunities in the consumer side, which could really have a very good effect on the SME side or the medium term corporate side.
I think that's true. Like the benefits right now seem to far outweigh the negatives that come along with it. Although some economists like they still believe it's a little premature the rate cuts. They should have still waited for a few more cycles before implementing it. But I think that's the direction we are heading. So we'll be able to better assess it after a few months. What impact is this actually
Yeah,
having? Yeah.
yeah,
Uh,
agree, agree.
yeah, so I think okay, let's move on to something. Let's move on to our main goal and the main topics that we want to cover today. So I think starting off very generally, about 80% of the global trade that happens today happens on open account terms, and
Yeah.
the risk associated with open account terms have become more and more significant in the recent times, I would say. So how do you think that it's critical for businesses today to mitigate this risk that comes with open account sales?
Yeah, usually I am so much happy to share my experience since the early start of the company here in Egypt, Egypt Factors, because 17 years ago, when I was speaking about factoring with my clients, they were so much, looking at me like this, factoring? What does this mean? Factoring, we don't know anything about factoring. But I must say that the market now is a buyer-driven market. So the open account terms is one of the biggest terms currently in place. And in market like Egypt, in market like the Middle East and Africa and Asia, you will always find a buyer who are very big and influencing the supplier, imposing certain terms for the trading transaction. And usually the open account term is the most preferential term the buyer is using currently. So the supplier will find himself anyways has to deal with open account, but uh, 17 years ago, the supplier, which is a client at that time, was saying this as type of imposing from the buyer side. But currently, I must say, when we try to speak more about the importance of open account, the client was in favor, or it's not the type of that you have the client trying to resist or to pursue the buyer to change the term. On the other side, the client currently is in favor of dealing under open account because the type of knowledge and awareness of the open account and the open account terms and how to mitigate the risk and why factoring is quite important or why supply chain finance is quite important for the supplier to be too big and to enlarge the businesses with the buyer. So I must say that now the to influence the supplier to deal with open account because this is anyways the buyer market and the buyer decision. It's becoming very easier right now, much easier than before, and this because of the awareness now, right now in the market that the supplier quite understand that the banks it's very the banking product is very good for his financials, for his growth. However, the products coming from the trading itself, which is we are saying the embedded finance coming from the factoring or from the supply chain, this type of product is the one suiting him to meet the need of the working capital and to mitigate the risk. Because the factoring company and the supply chain finance solutions in general, the nature of this solution are solutions quite understanding the seller cycle, quite understanding the seller documentation, quite understanding the risk of the buyers, the country risk, even the market risk on the buyer side, and they are trying to provide the proper risk mitigate to the supplier or to the seller, not a general risk mitigate. It's a risk mitigate related to a buyer, related to a country, related to an industry. So they are trying to find the proper tailor-made solution that could fit the need of the supplier and to provide him with one-stop shop of a bundle of products that could cover the needs with a mitigated way. So, for instance, if the supplier will going to trade on open account term, doing the factoring, cross-border factoring is a quite important because Under the cross-border factoring, the supplier will find FCI, the FCI chain, the members of FCI. They have a very good visibility among 90 countries, 240 members almost. So they can give him the credit cover element, they can give him the collection element, they can give him also the early alerting signals. No, please take care. This buyer, the buyer information in the market is not really promising, or the buyer faced previously problems. You have to make sure that you are uh, having the terms and conditions in your contractual relation with the buyer that covers you. You must be able to cover certain risk in the terms and conditions itself, or your sales agreement or your purchase order. We can give you the information, we can give you the credit cover element, we can give you the collection element. So all of this type of mitigations will give the supplier the ground to grow more into the open account world.
Yeah, I think definitely you covered the entire aspect of it. So I think we've got a
Yeah.
question here. We'll just take up this question in that in the meantime. Question from Vinod. Hi Dua, what is the regulators and governments in Africa and Egypt in particular doing to promote open account trade and factoring?
We are so lucky in Egypt because when we started to promote the factoring industry at that time, we were having the full support of our regulator, the Financial Regulatory Authority, and they were having this type of vision that to implement the factoring industry in Egypt, we have to implement it by adopting the international standards, not by trying only to see what is the market requirements from the local perspective and to try to to overcome the local requirements only. No, they were so much intelligent to see this type of vision that we have to implement the international standards. That's why they started to listen more to FCI. They start to have a lot of collaboration and joint meeting with FCI, with the regulator here, and with supranational banks like Afrexim Bank, like IFC, the private arm of the World Bank. They started from the very top level, how to implement the international standard in the Egyptian market, and later on how to customize this international standards to meet the local needs of the market. So we started with very general guidelines. These general guidelines were the initial or the initial start of the legal and regulatory framework here in Egypt. And these general guidelines were so much influenced by the general rule of international factoring, which is the GRIF, the rules that govern the members inside FCI doing cross-border factoring. So they started to study the general law of international factoring, and they start to find what is really suiting the market here to customize the general rule of international factoring until we reach the first initial general rules of factoring in the local market. And since this was in 2007, then we start to do a lot of customization and additions until this reached to be the first law of factoring and leasing that has been approved from the Egyptian parliament in 2018.
Okay, so I think the story about Egypt, I think you're expecting a similar story towards happening in Africa today, where because this is a very common question we get on a chat show multiple times, and I think you're the right person to answer it. You know, being part of the steering committee for the Export Import Bank in Africa, how do you see the same thing getting replicated in Africa for
Yeah.
exporters globally?
Neil, usually if you are focusing in advocating and developing the open account and supply chain and the factoring industries in developing markets, Africa for particularly, or Middle East or Asia, you have to have a collaborative work. You cannot do it by your own self. So neither the local factoring companies alone will gonna be able to do it, or the regulator of these countries, or even the banks, the commercial banks alone. So you have to have a collaborative effort between the regulators, the local members, the local banks, and the supranational banks because this needs a collaborative efforts. In Africa, for instance, FCI with Afrexim Bank, with EBRD currently, and of course IFC, they are collaborative. They have their own initiatives and collaborative effort to boost more development in the Africa region. For instance, I am the steering I am a member in the steering committee of the first recording system for invoices. So what we are trying to do is to have a sort of platform. This platform, you can just log in and you can search on this platform to see the invoices and to see the receivables, and later on to link this receivables with the funders and to see if this receivable is already assigned to anybody else. Does the supplier already took any type of advances on these invoices, yes or no? So first of all, we need to have this type of receivable recording system, and later on to link this receivable recording system with other systems in the market, which could give you the solution that you can record the invoice, verify the invoice, and later on fund the invoice. So having the collaborative of different stakeholders in the emerging market, plus having the solution, the technological solution, definitely this will lead to more development in these markets.
I think
So
what
the
you
key aspects for me is collaboration between different stakeholders, plus adequate technological solution that could really solve the problems and the challenges in such markets.
I think what you explained was very, very unique and something which a lot of people wouldn't be aware that this is what is being in the process of being implemented. So I think once it's completely implemented, I'm pretty sure that it will help exporters globally who want to export to the region but are afraid right now because of the open account risk, are afraid about having not very easy availability of credit insurance policies for importers in Africa. So I think once this is there on a global scale, it will definitely have a huge impact. Okay, I think there were a
Yeah,
few other questions. If can someone just get back? Yeah, sure. You were saying something. Yeah.
so
Yeah. Okay. So I have a question from Gaurav. Uh, Factoring finding relevance in working capital finance and emerging markets. Any new innovation in the supply chain finance to reach deep tier and provide new solution to MNCs and very large corporations?
Neil, in this regards, FCI have a lot of initiatives. So FCI trying to be part of this new technological solution of the embedded finance by collaborating more with the platforms in different markets. So for instance, if you have a platform in a market and this market and this platform can give you the opportunity that you can see the invoices, you can see even the trading parties. So in Dubai, for instance, I was so much impressed by the solutions in Dubai created by a very big cargo companies. So these cargo companies are having the transaction or the shipping in place. So you can see the supplier and the buyer, and you can see even the container. You can search and see the supplier, the buyer, and the shipping moving, and you can trace the shipping very easily. So the cargo companies decided, why not we can offer a solution that even the funders can be part of this platform. They can see the trader, they can see the buyer, they can see the cargo itself, they can see the shipping documents, and they will definitely see the invoices. So why not to connect the funders with this type of platforms for them to be able to give the funding and to cover the untapped funding opportunities for the supplier who could be an SME. So this is a very good and strong initiative. There is another initiative that you have this type of supply chain embedded in the buyer system. So anyways, it's part of his ERP system. So the anchor buyer have a very strong ERP system. And anyways, for you as a funder, you can easily plug in into this system. So the buyer can provide the funding element embedded in the system to the supplier. So the supplier will be in a position to upload the invoice, And in the meantime, immediately he will be able to just press a button. The buyer will gonna provide the funding to the supplier via one of the banks or the factoring companies he is dealing with. This is all covered by a very strong ERP system. So I have my own beliefs that this type of solutions and this type of collaboration will definitely boost the open account solution in most of the emerging markets. Because anyways, technology is now moving very fast. And anyways, technology is very integral part of any trading transaction. So it's a very smart move for any factoring company or any financer to be part of this technology to be able to give the funding to a very small SME who is not able to get it from normal traditional banking instruments.
Yeah, I think what you said is very true. Like it's important. Factoring is actually you're structuring products specifically to a requirement of somebody where a small SME somewhere is able to receive funds from a big company worldwide, knowing that they have a good capability, good orders. You don't have to stop doing your business or slow down your business just because you're not having the right availability of funds at that point in your country. That overall
Yeah.
expertise is really helpful for the small growing businesses locally, definitely in emerging markets. Another question from Mr. Vinod. Dua, in Egypt, does Islamic banking recognize receivable services, and whether Islamic banking supports supply chain finance and factoring?
In Egypt, Islamic banks always exist, but they are more active in the traditional type of doing the trade finance and providing the Islamic finance. Under the supply chain finance, there is a lot of initiatives currently in place to promote more Islamic factoring under the supply chain finance in general. And usually the problem was not the problem, the challenge with the Islamic solution, Islamic factoring solution, that the factoring company need to be part of the deal before the execution of the invoices. So you need to be in the relation with the supplier from the purchase order phase. So you have to have your contractual relation with the supplier starting from the purchase order phase, not starting from the receivables creation phase. So you have to be partnering with the supplier, knowing the terms and conditions of the PO, and saying to the supplier, yes, I will be able to fund the PO. And later on, once the invoices are created, you will be able also to give him the incremental finance on the receivable. But the crucial side that you have to be part of the contractual relation between the supplier and the buyer since the very early beginning of the transaction, not from the start of the receivable.
Very well explained. I had absolutely no idea about this, and I'm pretty sure a lot of people wouldn't know about this. Uh, we have
Yeah.
another question from Gopi Krishna. Egypt is a vibrant market for Indian exporters, and they keep requesting us for cover, credit cover, I guess. Could you share insight on the currency regulation by CBE and also the sunrise sectors in Egypt economy to understand better?
Yeah, this is a very important question, Neil, because during the last couple of years, Egypt were facing some challenges in providing the foreign currency in the local market, and this unfortunately was having a very negative effect on the open account trade finance in general, because at that time the Central Bank of Egypt was imposing that any type of trading should be done under LCs to make it more risk secured and regulated. And to provide the local, the foreign currency to some of the preferential industries, which is the very high priority industries in Egypt, because at that time the foreign currency in Egypt wasn't the, there is a sort of issue in having all of the needs covered by the central bank and the banks sector in Egypt. But currently, I must say that the situation is quite much better than before. Now, the foreign currency in Egypt is quite available. There is no issue for the commercial banks or the Central Bank of Egypt to provide foreign currencies, and accordingly, they start to relax their position regarding putting certain restriction on trading under open account. So now any supplier can trade under open account easily. Documentary checking now under is okay. So either they can do open account, which means that the buyer will be getting the documents outside of the banking channels, or they can do it under IDCs, or they can do it under supply chain finance different solution, not necessarily under LCs. And the foreign currency, it's not an issue currently. So this relaxed the situation, and accordingly, it bounced back again, that most of the transactions currently done in Egypt under open account or supply chain finance schemas.
Okay, so I think what you're saying to say is that there's no issues now, and definitely
No.
we can see people are worried about what happened in the past. Don't need to hold that prejudice back, and I think going ahead, there's definitely a future, bright future for Indian exporters who are looking for credit insurers for Egyptian buyers.
Yes, 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 yes.
Okay. Just thinking something a little basic for a lot of our viewers. How is the FCI Factor Chain International adopts the two-factor model? How is that different from your traditional factoring that happens globally, and how is it beneficial?
For me, FCI, which is formerly the Factoring Chain International, they are having a very strong pillars in place to boost more the understanding of the factoring business. So, FCI role not only to facilitate the transactions of its members, but also to develop the industry. So under the umbrella of developing the industry, they are doing very strong initiatives like advocating with different stakeholders. So they are quite aiming to go to different regulators in different markets to let them understand more what is the cross-border factoring and how is the importance of the cross-border factoring and what will be the impact if they started to facilitate the role of de facto companies and the role of the commercial banks and the trading parties in doing more cross-border factoring. So they are trying to advocate, first of all, the importance of the factoring business with the regulators and the different stakeholders. They are trying to give them the best practice, the operational best practice, and the legal best practice. For instance, they are collaborating with supranational banks in promoting the model of law. In our case, Afrexim Bank created a model of law, and this model of law was part of the cornerstone of the current legal and regulatory framework in Egypt. They are trying also to do the same in different countries like Kenya, Nigeria, Senegal in Africa. So by adopting a model of law of a supranational bank, this could be a start for any regulator to understand the legal side of the open account trade finance. And once they started to understand, they will be more relaxed and more comfort to develop this in their own regulations for the market to be more regulated in this perspective. So the advocating is a quite good side of what FCI is doing. The promotion also is quite important side, doing a lot of promotional conferences, workshop, training workshop to let the market understand more about the factoring aspects, the risk mitigation, the operational best practices, the legal and regulatory framework. Also to do education. The education is quite a key. For me, uh, uh, 17 years ago, FCI played a vital role in educating Egypt factors and most of the local factory companies here in Egypt how to do factoring. Not necessarily the cross-border factoring, factoring in general, how to mitigate, how to put your procedures. how to decide upon the risk mitigates that you need to have it in place, how to start to transact under the cross-border factoring, or even to transact under the domestic factoring. So advocating, promoting, educating, lobbying, networking, even providing information like the statistics and the surveys and the market information about the open account. All of this type of initiatives, FCI is providing, of course, with the collaboration of the supranational banks, trading associations, local associations, to make the markets more aware and confident to deal under open account, cross-border factoring, or even domestic factoring.
I think what you very rightly said, that the education, I think, is the key for the regulators to actually understand what factoring is, what benefits it will provide. Then they're able to set up the entire infrastructure necessary for factoring with the specific requirements of that region. So I think the
Exactly.
way you said, it happened in Egypt 15 years, 18 years ago. Once you started, it's happened in India in a similar way. And I think slowly in the emerging markets, the Middle East, the North Africa region, where we've not seen it still established, we're slowly heading towards that direction. But people need to, the lobbying needs to be there, and people need to be made aware that why factoring is the right way to go ahead for the local businesses.
Yes, fully agree. And I must say that people meeting each other. So when I am going to any country in Africa or in the Middle East, the most passion I can see from the people connecting with me is my stories, my best practice, my experiences, so they can have a solid base of how factoring is moving, how it works, how to mitigate risk. But usually to listen to your own experience, to your own insights, what challenges you went through, what type of opportunities you are trying to cover, this is usually the most passionate side coming from the audience, because they would love to hear you, would love to find someone who could say, go ahead, please don't be worried, don't be afraid, everything will be in place. You have to do it in this way. You have to listen to you have to see the success stories coming from similar markets. You have to simulate this type of success stories. Usually people are finding this quite promising, to listen to expertise coming from similar region and to try to simulate the same success stories more or less, of course, after doing some type of customization which could fit their markets more or their clients more.
I think very well said. I think what is critical is when you hear a live version of it, like an actual example where it's being executed by someone and it's successful, it becomes comparatively much easier for people to see the benefits and accept
Yes,
it rather than it just being theory. Like it's on paper is one thing, everything is looks
exactly.
good, but when you've executed it, people are able to accept
They
it
can
much
see
better.
it live.
Yeah, definitely, definitely. So I think there was another question. I think for technical reasons, it's not coming on the screen. I'll just read it for you from Vinod Vasan. Good volume of exports is happening from India to Egypt. However, getting FCI import cover for Egypt is a challenge. Why is that? And when do you think FCI member will start providing active import coverage for Egypt?
Yeah, I will tell you why it is a little bit challenging to provide import limits from Egypt. For instance, for us Egypt factors, we are happy to provide credit covers because we are having the expertise and the know-how, and we are member with FCI since very long time. So we don't have the technical problems to provide the credit cover. Usually the problem coming from the fact that there is no enough data still in the market, because in some very developed market the data is quite easy to find. You just log in into certain platform or to Google it, or even you will have the financials published, and most of the data you will need to do the credit assessment and to provide the credit cover is already available. But still in Egypt this is quite challenging to find the data available and to find the financials available. So For you to be able to provide a credit cover, you have to have a buyer who is quite cooperative in providing you with his financials. So the buyer must aware of your existence, and the supplier must introduce you to his buyer, and the buyer will provide you with the financials, and you will be have a sort of solid ground in verifying and qualifying these financials. So the financials are coming from very good auditor, and the company is giving you this type of comfort that the financials are qualified well. So first of all, to find the financials, to find the information in the market, it's not easy as any type of developed market. Pressing a button and you will find everything already on your screen. So you need to get this financials from the buyer. You need to get him very cooperative in giving you the authority to investigate his credit situation with other banks. This is very important as well. You need to do your own market surveys to get the information about this buyer from the market. And you need to have a certain confidence on the type of documents provided from the buyer.
Correct.
So if you don't have these elements in place, unfortunately, the credit cover will be so hard to provide.
I think it's more to do with the public domain information is not sufficiently available for
Yes.
financial institutions to actually assess the buyer and take a call for credit cover based on that.
Yes,
So,
especially if this buyer is an SME. If it's a big corporate, it's easy to find the information. But if the buyer is an SME or mid cap, usually the information not available, and you need to get it from the buyer, and you need to make sure that the information and the documents are as per your standards, you know.
but so then what do
For
you see the
instance,
solution to
the
this?
auditor criteria has to be in place. The investigation from the banks must be in place as well. A market survey must be in place. A lot of, a full credit assessment cycle has to be in place.
So what do you see, just very honestly, what do you see the solution to this? Like, I think once we move out from an emerging to like a developed economy, I think that's when we'll be able to find a solution. Or slowly, how do you see this
Yeah,
getting solved, this problem?
my own belief that instead of trying to assess an SME, you can understand quite well from this SME what type of buyers he is dealing with. If he is dealing with anchor buyer, for instance, he's dealing with Carrefour, he's dealing with Electrolux, you can easily go and speak to Carrefour and Electrolux as an anchor buyer, and you can provide the solution to these big buyers because anyways, you will getting your money from this big buyer. So if this big buyer is willing and happy to connect or to plug you into the cycle of the invoicing and confirming of the invoicing and all of this type of logistics, so you will be able to confirm the invoice and eventually you will get the payment from the buyer side. You can provide the funding to the SME backed by the buyer side.
Understood. And so
So
you
it's
need
a
to have,
chain. So
yeah.
it's a chain. So if the buyer, so for instance, if India Factors were gonna send me now inquiry about import limit with one of the buyers here, if this buyer is a supplier of another big buyer, I can make it a back-to-back solution or a complete supply chain finance solution. It's quite
Coming,
complicated, yes, I must say, but again, it's much better than saying, no, I will not be able to do it, or it's very hard to do it.
you need to structure it. Someone sitting in out there in the local market will have to understand the entire business and structure it in such a way where they are comfortable taking the credit cover based on
Yeah,
the eventual buyer who has a bigger
yes.
volume.
Once you are confident that you will have your proceeds or your payback coming back from someone you can rely on, a solid entity that you are 90% sure that they will pay you by the due date, you can start. backward looking into the chain and to provide the funding to the smaller SMEs.
Correct. So the entire chain gets the benefit. So it's a
Yes.
bigger volume, but we cover much more distance as well. So it's a
Yeah.
win-win for everyone. Yeah, I think thank you for that question, Vinod. Another question has come in from Akash. What is your opinion on strategic fintech partnerships in the factoring space to drive innovation?
I think this is very important, and the collaboration between the financiers and the fintech is now it's not a nice to have anymore. So the collaboration between a fintech solution and a financer, I believe this will be the key element for the developing on the factoring industry in the future, especially in emerging markets. Because no, the fintech itself will not be able to cover all the market needs, and the financiers itself, the factoring company or the commercial bank, will not be able to do this type of providing the funding under factoring schema by its own. So the collaboration between the two elements are quite important for any developing of the factoring industry or open trade industry in general.
Yeah, I think very rightly said. Both of them bring some expertise to the table. The
Exactly.
fintechs bring the technology, factoring have the factoring expertise, and I think it's them combining will expedite the whole process of providing a wider range of services to a wider range of audience. I think that is
Yeah,
critical.
and usually the most important aspect with any financial institution is the visibility of the market, that they understand the market, they can see that they are mitigated the risk very well, and they have the technological partner who can provide them with the solution. Because sometimes using hard copies, using documents, verifying the transaction in its classical way, it's quite impossible to do the business.
Very
So
rightly
if
said.
you have the technological partner who can provide you with a very smooth, easier operational workflow and procedures, and also they can provide you with the proper risk mitigate in place, this will give the comfort for any financial institution to start really, you know, cover the untapped funding solutions.
Very, very true. Very true. Just coming back to Africa for another time. I know because you are the right person who can actually guide people on where do we stand, and so I would just like to understand: is there some kind of a timeline that we are looking at by when we will be able to have credit insurers or financial institutions in Africa ready to take that call for buyers based out of the region?
Yeah, Nil, because this is very crucial. There is a lot of supranational banks are really focusing on the element of the credit insurance in the Africa region. And this does not really mean that I have to have a credit insurer who will gonna provide me with a policy and I will be able to transact under this policy because of the credit insurer are giving me the limit I am looking for. We started to think of the matters in a quite different way. So, for instance, EBRD, they are now adding 2 or 3 countries in Africa as one of their member countries. Afrexim Bank is quite active in Africa because this is their vision. What they are doing, they are providing a sort of a guarantee schema. What is this guarantee schema? Guarantee schema means that they can guarantee the factoring company in Africa for another export factor in Europe because the factoring company in Africa are not that financially solid enough for the export factoring in Europe to take the risk. So they can issue a guarantee for the export factor to undertake the risk of the import factor. This is from one side. From another side, they can also undertake the risk of the transaction. So if you have particular transaction and you would like to find someone who can share the risk with you, EBRD or African Bank can do this under their guarantee schema. They can also guarantee the buyer itself.
Is this
So under the
currently
guarantee schema of the Afrexim Bank or EBRD, they can cover the risk of import factor to another export factor in Europe or in America or in any other region in the world. They can also cover the risk of the transaction itself, and they can cover the risk of the buyer. So this, I believe, might really solve a good part of the problem of not finding a proper credit insurance existence or coverage in the Africa region.
so whatever you just the structure you suggested, is this currently being implemented?
Yeah, it started 1 or 2 years ago with Afrexim Bank. EBRD just started yes, I believe 6 months ago, they started to add or to, approve some of the countries in West Africa as their member countries, which means, and I believe that they are currently putting the model in place to start activating this schema in the Africa region with the 2 or 3 member countries, and later on they will gonna add other member countries coming from the Africa region. So of course they are covering North Africa since very long. They are covering Egypt since very long. What I'm speaking about right now is Central West Africa.
Correct, the lesser explored regions where. So I think what you're saying is very true. Like till the time of the factoring companies by themselves are capable enough financially to give that comfort to the import export factors in Europe and other countries. Somebody else needs to be involved and take that position where they're able to give that comfort to the export factors till they stand on their own feet. And I think once people are able to see a few transactions route through few years go by, automatically the comfort level for the buyers, for the credit insurers will definitely increase overall.
Yes, yes, yes. I do believe that this type of guarantee schema will be able to at least cover 50-60% of the problems, because usually uh, one of the most common issues that if I am the export factor and I have the import factor who could provide me with the needs, I must be able to qualify this import factor, to study it and to put limit on it. So this, I saw this a lot of time. This could be a stopper for the deal. If I can find one of the supranational bank giving me this type of comfort by providing me a guarantee, I believe this will give me the ground to start transact with the import factor. And later on, we can also have this type of guarantee on a specific transaction. If we have a very good deal transaction in place, we can channel this transaction to the supranational bank and they can provide us with the guarantee we are looking for. So we are trying to, to simulate different solutions until we will be able to have coverage from the normal credit risk companies like Atradius, like COFAS, until this provided in the Africa region, we have to find other solutions in place. We have to find a way out of the problem, to be able to grow more in these regions.
Very well explained. I'll just take one last question because we're running out of time. So we keep hearing about new technologies, AI, blockchain, very often right now, ChatGPT and everything. So how do you think these things are going to integrate with supply chain finance and the overall global trade?
As we said previously, Neil, technology is the key. So technology means that there is full coverage to different markets, global markets. So as if you have your local market turn to be the entire world, And under this platform, every party in the trading transaction is plugged in. The trader, the supplier, the buyer, the cargo, the shipment, the bank, the financial institution, the credit cover company. So everyone part of the trading transaction can be part of this embedded blockchain, name it, embedded technology, name it, ERP, complete solution, name it. There is a lot of different names, but the idea always coming from the fact that you are able to integrate all the parties in the trading cycle in one technological arm.
I think very
And this
rightly
one
said.
technological arm is giving you a complete visibility of the transaction and the trading parties in this transaction.
I think technology has played its role in bringing everyone closer and making things more comfortable for everyone, more acceptable for everyone around the globe in terms of the
Yeah.
global trade. Yeah, I think we'll again thank you so much for joining us and sharing all your views. And I think it was definitely very insightful for me. And again, thanks everyone who joined in and hope you were able to answer your questions. Hope we did justice to all of that. So if you want to know anything more about India Factoring, please visit our website or drop us a message. We'll connect with you and we'll wait for you till you join for the next live chat show. Again, thanks a lot, Dua, for joining. And once again, thank you for removing time from your
Thank
busy
you.
schedule.
Thank you so much for this great opportunity. I'm always very happy to share my insights with India Factoring teams and with all of the stakeholders who really believes on the factoring industry and the open account receivable finance industry. Because from my own point of view, this is the future of our economical growth, particularly in developing markets. So thank you so much again for giving me this opportunity to share my insights, and I'm looking forward to more opportunities to connect with you guys. And thank you so much again. Have a great day.
Thank you. Thank you, everyone.